Hello traders and welcome to another video review. Today is Monday, September 2nd, 2024. Let's find out what's going on the economic calendar today. Overnight data from Japan in form of the capital spending, which beats the expectations of 9.6% with the actual number of 7.4%, which is better than the previous reading of 6.8%, but not that good like the forecast. Building approvals in Australia soars from minus 6.4% to 10.4%, beating the expectations of 2.4%. However, the company gross operating profits deteriorates even lower from minus 2.5% to minus 5.3%, which is way worse than minus 0.6% expected. Chinese CAC in manufacturing PMI beats the expectations of 50 points with the actual number of 50.4. And then we got the data from the Eurozone. German retail sales are scheduled for release at 8 o'clock. UK nationwide HPI is scheduled for release at 8 o'clock. And the retail sales from the Switzerland beats the expectations of minus 0.2% with the actual number of 2.7%. Spanish manufacturing PMI is scheduled for release at 9:15, and the PMI from Switzerland is scheduled for release at 9:30. Manufacturing PMIs from all of the rest of the European countries like Italy, France, and Germany, together with the manufacturing PMI, are scheduled for release between 9:45 and 10 o'clock. So please keep an eye on this situation whatsoever. And of course, the UK manufacturing PMI is scheduled for release at 10:30. And that's about it. New York session doesn't have any important data for release. So I guess we should take a look at the technical picture of the Eurozone, which means that we're going to take a look at the euro dollar and the British pound to the dollar. And we will do the majors overview. So let's switch straight on to the technical part. Let's go to the euro dollar. 4-hour chart of the euro dollar shows deterioration in wave 5 towards the level of 1.1043, just as expected. So now we got this 5 waves into the extremely oversold market conditions that has been actually completed. So 5 waves down is done. The market might be ready to move higher. We deteriorate minus 1.44, which is the biggest correction since the low of 1.0780. So as you can see, this is the dynamic impulsive decrease to the downside. The bulls are trying to bounce from the extremely oversold conditions. We will see how they will manage, because just above this, just above them, there is technical resistance 1.11, of course, and now they are testing the 100 periods moving average 1.1061. So overall, it doesn't actually look bad. It looks very good for the bulls. But please remember, because we've done 5 ways to the downside, any movement to the upside will be considered as a short-term temporary ABC pattern or any other corrective pattern to the upside that might be terminated very shortly. So please take this into the account. The outlook, temporary outlook for the euro dollar remains bullish. British pound is doing what we expected as well. If we just zoom in a little bit, there you go, and maybe I will just switch it a little bit to the upside. There you go. You can see that we extended that drop from the top of this is 1.3265. I think I will be able to grab the correct, no, unfortunately not, maybe this, and I will be able to grab it. There you go. We moved lower towards the level of 1.3111, so that's minus 1.20, and this is a big technical movement to the downside. Let me just remove this, because we know that already we get overbalance of price and time. That's not a surprise here, and we are now testing this technical support we broke below the technical support 1.3139, and we're testing the trend line dynamic support. However, look at the momentum tried to bounce above the level of 50. It was declined, and now we are trying to bounce again, but from the territory of 38 points. So that's definitely something we should be aware of, because the bears are in charge of this market. If we zoom in, let me just take a look at the recent let's say situation. So we can see some sort of the local channel here. Let me just apply the channel, because it might be very useful in a second, because as you can see, the market sees this channel, and it keeps moving towards it, and it's being respected. The channel is being respected. So maybe if we do something like that, there you go, perfect channel, perfect descending channel on a 4-hour chart of the British pound. We just hit the lower channel line. Now we're trying to bounce. The next target would be somewhere around 1.3180 area. So this is the next target we should see for the bulls eventually, but that's still the technical resistance. There is more technical resistances. The high of 1.32, the 1.3226 is the technical resistance as well. So please don't get just too much, don't get too overwhelmed with the movement to the upside, because it looks like it will be only the corrective movement. Nevertheless, this one, 1, 2, 3, this one, it doesn't actually looks like completed. Let me just apply the Elliott wave pattern, Elliott wave impulse wave pattern. If we apply this to the recent price action of the British pound, we can see that the possible wave 3 has not been even completed. Let me just get rid of the magnet. There you go. So the wave 3 has not been even completed, and we need to see more deterioration in wave 3, then we need to see the wave 4, and then we need to see the wave 5 to the downside. So of the wave 3, we got only wave 1, wave 2 of wave 3, wave 3 of wave 3. We cannot break above the 1.3143, sorry, because if we do, then this scenario is invalidated. So 1 of 3, 2 of 3, 3 of 3, 4 of 3, and then movement to the downside, finishing the last wave here, wave 5th of the wave 3 of this wave. Then we are ready for the correction. Then we are ready to resume the down trend. Of course, if this is not the impulsive pattern to the upside, the other situation here is that if we move higher above 1.3144 towards this technical resistance, then we got, of course, ABC connector, wave X, ABC to the downside, which is even better for the bulls, because that means this is in that scenario this would be the downside correction that must be completed, and when it's completed, then we go to the upside in an impulsive fashion. What the US dollar did, US dollar to Japanese yen did overnight, not much. We still are fancy. We still are moving in this kind of a cycle. So we need this movement to the downside to be completed. The recent high was made roughly around 146.61, just above the 100 periods moving average. We got very nice technical pattern here. Candlestick pattern here. Of course, we got the shooting star, and then we got the confirmation. Now the bulls are trying to bounce back up, but it doesn't actually looks that strong anymore. So maybe this irregular flat to the upside is completed now at 146.61, and the market is ready to continue lower. So the second ABC pattern might not be really necessary. So please notice the fact that we're still continuing the wave 5 to the upside, to the downside, of course, and as long as we got this pattern, so that means as long as this zone here, 147.90, 148.24 is not violated, the outlook remains bearish, because we need to complete the wave 5. There is a possibility that the 5th wave here has been completed already at the level of 143.46. However, for now, that would be the running, cut trimmed fifth, right? So too early, but that's the corrective, and that's the pattern that is very, very rare for the impulsive waves. This shorter than expected wave 5 means that we should see dramatic, impulsive, aggressive increase in the US dollar to the Japanese yen. If we don't see it, then there is still a room to the downside for the wave 5 to be completed. Now we're leaving the US dollar to the Japanese yen. We go down to the Bitcoin, and the Bitcoin is following our path. The Bitcoin is following our path right now. This trend line has been briefly broken, and there was a clear battle here between bulls and bears about this trend line. But it looks like the bulls eventually lost, and now we broke below 57,787. We are still expanding to the downside. We are still moving lower. We are still continuing to develop the wave 3. When wave 3 is done, as we know, then there is a wave 5, wave 4 to the upside, counter trade, short-term corrective cycle, and then we can continue lower in wave 5. So right now everything looks according to our scenario. This situation here is very good for the bears. We should see movement to the downside very, very soon in form of the extension in the wave 3. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.